Hey guys, welcome back to my channel. And if you're new here, I'm Miriam Dow, wife, mama for real estate investor and entrepreneur. In today's video, we're going to be looking at some multifamily listings under $100,000. So I know a lot of you are interested in getting into multifamily investing, but to be completely honest with you, those of us who are on the East Coast, we're gonna have to get out of state. These New Jersey taxes is crazy. If you haven't watched my previous video, I did go on a little rant about my first Airbnb that I bought back in 2020. The taxes jumped up on me almost $2,000. So I had a mortgage of $1,184, and it felt like overnight my mortgage payment went to $1,657 because of the increase in taxes. And with the increase of my tax, my insurance provider also decided to increase their insurance quote. So $478, it's a shit show. Honestly, New Jersey taxes is way too high. So let's look at some other states. I've been looking at this state for years. First state we're gonna look at is Cleveland, Ohio. I'm sure if you follow any multifamily investors, you know they probably own some property in Cleveland, Ohio. If you're looking to get into a multifamily unit, you live on the East Coast like me, New Yorker, New Jersey, Connecticut, Philly, Cleveland, Ohio has properties way under $100,000. Look at this property right here, currently on the market. So if you look this up right now, you'll see it's on the market, and it's been on the market for a while. They actually did a price reduction and it's still not selling. The price of this home is $62,900. Now let's do a little bit of math so you have an idea of how much you'll be coming out of pocket. Let's say you're interested in this property. It looks like it's a 2-bedroom, 1 bath on both sides. When you're buying an out-of-state property, you're not living there, you can't take advantage of the low FHA down payment. You would have to come up with about 20% down payment, depending on the lender, but 20% is usually what you're coming out of pocket with an investment property. 20% of $62,900 is $12,580. Now, that's your down payment. Closing cost is usually around 10%. It could be higher, it could be lower. I remember my closing cost for my property that cost me $85,000 was literally like, it was like about $1,000. It was really, really cheap. So for this property, just for numbers rise, just so you can have an idea, if we do 10% of $62,900, you come out with $6,290. Now $6,290 as the closing cost plus the down payment of $12,580 gives you a grand total of $18,870. That is what you will have to come up with out of pocket. Now there are a ton of hard money lenders out there. If you guys want some hard money lenders, I could send you some people. Now, just so you know, hard money lenders, they are very expensive. Usually those payments are interest only, but with the hard money lenders, if you're buying a property that needs work, as long as you have good credit and they want to see experience, some of them want to see that you did at least 3 to 4 deals, rehabs, rentals. They just want to see that you have some experience and that it was relatively new experience, not like 5-6 years ago. You can get approved for a hard money lender, and what they would do is they usually do 90% or sometimes 100% of the renovation cost. This particular property doesn't look like it needed a lot of work. That is what you would come up with out of pocket. Now, you want to know how much you'll be making off of this property. So I went to rentometer.com. I love Rentometer. Rentometer, y'all need to sponsor this video. This video is not sponsored, but yeah, y'all need to sponsor this video as much as I be giving y'all some shout outs. Okay. Rentometer, where's my brand deal? So Rentometer, you enter the address in Rentometer, you put in the listing, how many bedrooms and how many bathrooms it is, and it gives you 4 different prices. It gives you the average rent in that unit, in that area, the median rent in that area, the 25th percentile rent and the 75th percentile rent. I usually just go off of the median. Rent from Cleveland is usually on the lower end, so I knew it was gonna be around the 800 mark, but think about it. If you got 2 units giving you $800, that's $1,600. And you only came out of pocket around $18,000. Now, I know some of you actually have that money cash. If you were to just buy this property outright in cash, you know, do the little fix-ups that you need, you can then go ahead and refinance. When you refinance, and the lender always loves it that you have 2 signed leases. You go and you try to refinance a vacant property, it's always hard because you say on paper that you can get this amount, but can you really? But if you actually go ahead and get this property, you put tenants in both units, you get a local property manager to go ahead and take care of all that for you. Then you go ahead and go to a bank and you're like, hey, I just bought this property. I have 2 tenants in it for this. They're gonna go ahead and give you, most cases, 65-75% of that. So I want you to know these locations are not gonna be the best locations. Like I said, my first property in Trenton was not the best area, but all real estate investors, when they're starting, they're buying in not the best areas. So buying in the hood, and you want to do that because it's less expensive. You get your feet wet, you learn about the business, and then from there, as the years go on, in 2-3 years, you can pull out the equity, or you can even sell this property and maybe go ahead and buy like your first apartment complex. Remember how I said the taxes in New Jersey is crazy? My taxes went from under $3,000 to over $4,400. Taxes for this property in Cleveland is what really attracted me to. So the taxes that list on the website, it's always going to be a little bit higher once you close, because this is the previous year's taxes, right? So once you actually close, taxes is going to go a little bit up, especially depending on how much you pay for the property. So right now they have it valued at very low. I think it's around $7,000. So if you go ahead and buy this property for $62,900, of course that's gonna increase it. Now, since this property has been sitting on the market for a long time, you have some leverage here. You can go ahead and negotiate. The 2022 property taxes, from what I can see, is under $2,000. It's under $1,500. It is $1,143. That's about $95 a month. Sign me up, because what? It's gonna go up once you buy it, but it's not gonna go up that much. You're probably still gonna most likely be under the $2,000 range, which is, sign me up, like I said. Next market we're looking at is Detroit, Michigan. I'm always hearing about Detroit. I'm always hearing about Baltimore. I'm always hearing about Texas, but this particular unit that I saw online was in Detroit, Michigan. Property is actually listed for $58,000. It looks like this is a bigger unit than the previous one, but it's actually less expensive. But it has a 3-bedroom, 1 bath on both sides. Detroit property is a 3-bedroom, 1 bath to the left, 3-bedroom, 1 bath to the right. These units are you can get a little bit more for your money in Detroit. So when I looked it up, here goes the screenshot from rentameter.com. The median price was giving me around $1,200. So $1,200 times 2, that's giving you $2,400 gross. So you're still gonna have expenses that come out of it. I don't have all the numbers. This is just something quick that I thought I would come to show to your attention. 20% down on this property would be $11,600. 10%, if we're gonna do around 10% for the closing costs, just estimate is giving you $5,600. So all in, you're gonna put $17,400 to obtain this deal. Now let's look at the taxes. Why is it that the 2020 taxes for this property was at $690? It doesn't even look like it needs a lot of work, let's be completely honest. Please go through the listing. $690. What I misread when I saw the taxes for this property for 2020. I know it's 4 years ago, but right now what this information online is telling me is that the taxes for this property is $690. That comes out to $57.50 per month. Because at this point, sign me up. Excuse me? I know it's going to be higher when you buy the property. That's probably why it's sitting, because for us out-of-state investors, it looks like a really good deal, but it's sitting because the people that are in the area knows that they're probably listed way too expensive. So you could probably get this significantly lower, maybe 40 grand. Maybe, if you come with the cash, you could probably get this property $45,000, $40,000. And the fact that it's been sitting all this while, I'm pretty sure the seller is very motivated. Those are 2 examples of properties that you can get for under $100,000. Now, for my people looking to get into the big multifamily units, which is considered 5 units and up, small apartment complexes, I'm always on this website called Loopnet, LOOPNET.com, which gives you commercial properties, multifamily properties. I entered in Cleveland, Ohio, and I looked at 2 properties that were under $700,000 for a multifamily unit. The first property, this property is going for $565,000. And usually when you're getting into the small apartment complexes, you usually are coming out with a bigger down payment. So 25% of $565,000 comes out to $141,250. Now, I heard through the grapevine that usually brokers, they have great relationships. Like, for instance, I'm on a few, like 4 or 5 different text message lists and email lists from wholesalers. Same thing with the brokers. They have their investors that they work with that they send the deals to. So the really, really good deals don't even make it to the market. They go ahead and sell that before us, the rest of the population, sees it. So if this property is listed on Loopnet, 9 times out of 10 is not the best deal. Like, they probably want more for it, or they're not being honest with the information. That's why it's sitting there in the first place. So what you can do is reach out to the broker, get some information, let them know you're a new investor, get some information about it, let them know you're serious. If you're in the area, go take a look, go take a walkthrough, because these brokers, they, everyone in sales are looking to get the fastest deal. So if they get a deal, they're just going to send it to their investors that they usually work with, that's telling that they know is constantly buying deals. They're not really going to be thinking about you, but this is a great way to introduce yourself. Bigger Pockets is a great way to be networking, talking to brokers. So this particular deal might not be the deal for you, but if you give them a pre-approval letter and they know you're serious, they know you have good credit, then that's a good way to get into multifamily investing with small apartment units. And then another thing that is very, very, very important, when you're buying a property from a seller, they try to do everything in their power to make it look nice. So they'll say, oh, it's fully leased. All the apartments are leased out. Some people go as far as giving you fake leases, fake information. So what you want to do is you want to make sure current rental applications, you want to get all the identifications for the current leasees that they have in those units, get their IDs, make sure these people are really living in these units. Also get the past 6 months of the rent that these people paid. Because sometimes you'll go ahead and buy a property with a whole unit with someone who hasn't paid rent for the past year. And you're buying this, and now you have to start an eviction property as soon as you go ahead and close. They withhold a lot of information. This is very common. Your responsibility to do your due diligence when you're buying any kind of rental property, single family, multifamily, apartment complex. Make sure you get that information. You check all the leases with your lawyer. Make sure it's legit leases. If you have to reach out to each tenant, if you have to, then you go ahead and do that. And you look at their licenses. You make sure these people are actual real people, not just the seller's family members that they just threw on a whole bunch of applications to make the deal look better than it really is. And also, most important, proof of payment for the last 6 months. So I hope this video was helpful. I know a lot of you guys are looking to get into multifamily, and if these are some ideas, we need to get out of state, because I know a lot of my viewers on the East Coast, these New York, Connecticut, Yonkers, Jersey taxes, yeah, we not jacking it. We gonna have to go out of state. I know it's hard as a new investor to invest out of state, but you're just gonna have to do it, and you're gonna have to build a team. And this is a book that I recommend, Investing Out of State, by, what is his name? Derek Green? No, Brandon Turner and Derek Green. I think something Green. Listen, I'll put the book right here. But thank you so much for watching this video. I'll see you in the next one. Bye.